Hello all, in this session I will take you along in the world of the payment traffic. I'm Francis Roeck. I work for more than 20 years in the cash management department of BNP Paribas, so I know this domain by heart and I will share your experience. Have you ever wondered, for example for transfer, how the money flows from one bank to another bank? This is not a small truck running from A to B. Nevertheless, you can pay your phone bills, you can put your money here on an account and withdraw it somewhere another bank at another place. How does this work? This is now payment traffic. Easy, payment traffic is just a compulsory name for all manners of payments between people, between companies or with the government. This could be either cash or electronically via the bank account or a card. But why is this payment traffic so important? Without a good working payment traffic system, the economy would have a standstill. Trade would be impossible. We'd go back to barter, and that nobody wants, of course. If there would be an interruption in a payment traffic, the world would stand still. So it is very important for the trust in our financial systems. For banks and payment institutions, it is even a key function. You will manage a bank. Know that people will not only choose their bank because it is safe. They all want to have access at any moment, at any place, at their money, so they can make easy payments. So what would it be if you would put your money on an account without having the access to this money? A good PSP, or payment institution, is commercially nearly obliged to offer the best possible payment traffic. Let's go a bit deeper on some main forms of this payment traffic and focus, of course, on euro payments. We still have the cash. Cash is still there. So the notes and the coins, and believe it or not, in the Eurozone, half of the payments are still done in cash. Of course, not in value, but in number. It is diminishing. In Belgium, it was in 22 still 45%. Last year, it was only 39%. But cash will not disappear. Central bank is even supporting it actively because for some consumers, or in some situations, cash is still necessary. They even recommend to have always a bit cash at home for emergency cases. Beside cash, you have also the transfers. These are the electronic payments from a bank account. We can see here push and pull payments. Push payments are the transfers where the client instructs a bank to transfer the money to another account. This can be either classic or can be instant. Instant meaning that the money is within 10 seconds at the other bank. And let me clear and disapprove a myth. In Europe, without any exception, all classic payments that are introduced before closing hour are always executed within maximum one bank working day. Mostly it is even within the same day. So if, for example, you make a transfer at 2 o'clock in the afternoon, well, next day in the morning it will be on the other account. If, of course, you do it in the evening after closing hour, it will be executed the day after and transfer will be done the day after. Transfers are still the most important payment instrument. Yearly, in the Eurozone only, 32 billion transfers are executed. They are executed 365, 24/7 for the instant payments. This is rather unique. No, or nearly no, administrative systems turn in no break. From an IT perspective, you create really complex environments where even maintenance or new versions need to continue and you don't allow interruptions. The transfers continue going on by millions every day. Pull payments are payments where the beneficiary withdraws the money from your account. This can be either by a check, but we will not handle this instrument here, but mostly because the supplier is using a direct debit. This can, of course, because you have given the authorization, we call this the mandate, and the supplier will send a pre-notification. We think here direct debits for paying your energy bills, your phone, or your insurance, and no panic, you are protected. Within 8 weeks, you can always ask your money back, no question asked. So clients find this an instrument without worries. It is indeed an older instrument, I agree, but it is still popular and still growing. Companies like this instrument because it has such a predictable character. And know that 98% of the direct debits are successful. This is better than any other instrument. But be aware, this is an average. Some accounts, like for youngsters, you have only 50% reject rate, 50% acceptance because lack of funds. So be very conscious about what clients you will have in your game. But how now does the money flow from one account to another? Indeed, there was no truck running from A to B. But do you know where your money is on your current account? Well, in brief, all or nearly all the money of the current accounts is on one single account of your bank at the central bank. And each bank has an account at the central bank. So if you transfer money by one way or another in the central bank, this money needs to go from one bank to the other. And there are some specialized companies doing this. Clearing and settlement mechanisms, or in brief, CSMs. Banks send at many frequent hours in the day files to these CSMs. This CSMs is sorting them by beneficiary bank and send them on their turn to the beneficiary bank so that they know who will transfer them money. That is what we call clearing. This same CSM will now make some final statements and transfer them to the central bank to know exactly which bank globally owes what to what bank, diminished with, of course, what the other bank has to pay to the first bank. And the central banks execute these global transfers between the banks, and that's how the money is transferred from your bank to another bank. This is what we call settlement. Important to know is that the beneficiary bank will only transfer the clearing files on your accounts when the money is at the settlement. So first the money, show the money, and then the payments. All this payment traffic can only work with good agreements. Therefore, we have the PSD, the Payment Service Directive, that fixes who may do what, how fast will go payments, who need to be protected, what are the reject periods, return periods, and so on. These billions of payments couldn't work without some standardization. The European Payment Council, shortly EPC, has different payment schemes. The SCT, SEPA Credit Transfer, SCT Inst, the direct debit schemes, and they're all fixed in rule books. And every participant in SEPA, and SEPA is single euro, not European, single euro payments area, need to work against these schemes. So SEPA, with SEPA payments, in fact, you have what we call SEPA domestic. You make international payments same as you do them domestically. And SEPA works for all euro payments, also for non-euro countries, like Sweden, like Denmark. When they use euro payments, they have to do it SEPA-wise. So, for example, Switzerland, UK. The exchange between the SEPA payments is done in the format, in the ISO 222 format. International payments are a bit more complex. International payments are non-euro payments, and they differ because very often money needs to be exchanged from one currency to another, for example, from euro to dollar. And this can only when the exchange markets are open. That's why they take a little bit more time than SEPA payments, sometimes even some days. They're a little bit more expensive because of the transaction cost and the exchange cost. And then, of course, we have the card payments. In number, they are the most important, not in value. They are so important because a lot of them are hidden between other instruments. Your Apple Watch is a card payment. Your Amazon Marketplace is a card payment. Your 411 parking payment is a card payment. Your bol.com, you name them. These card payments can be either debit cards like Maestro or Bank Contact, or credit cards like Visa, MasterCard, Amex. These credit cards are mostly American, and that's why they're not so popular by European policymakers. For example, if the United States would decide to stop credit card payments on Visa, what they already did in some countries, we would have been stuck. That's why the European banks are working at a European card solution, the AP initiative, European Payment Initiative. Of course, it's only a startup, but you certainly used already Payconic or Vero, the European variant. A card payment seems easy, but it is rather complex. You can, in fact, see two phases. The first is the authorization, where the card is accepted. Is there enough balance? Is the card still there? And both parties are notified. And after the authorization, in the background, you have a kind of accounting between the bank of the merchant, which is called the acquirer, and the bank of the client, which we call the seer. And they exchange it via the data network. It is again called clearing. And finally, second phase, the money is also booked, and this is what we call settlement. For debit cards, it is you're debited rather directly. For credit cards, it is mostly once in a month. The client pays afterwards. After all these evolutions of payment instruments, we have other important evolutions in the payment traffic. Indeed, beside the classic banks, we have new players. I told already about PSPs, payment service providers, but we speak now about fintechs, neobanks, TPPs, third-party providers. A neobank is a completely digital bank without physical branches. They work mostly with apps and online platforms, and they have mostly modern and user-friendly services. Very often they even have a limited license, only for payments, for example. A TPP, third-party provider, is not a bank. It is a third party that has access to the bank accounts and can initiate payments on behalf of the client. This is possible by the European PSD2 directive. There are three kinds of TPPs. The account information service providers, the ISPs. They can access the information of your account and aggregate it, for example, the apps that analyze your budgeting of your accounts. You have the payment initiation service providers, think Klarna, Blade, Tink, so forth. Those fintechs, they can execute payments on your behalf without the client having access to his bank app. In fact, they do it in your name. Banks have no more direct contact with their clients. For example, a web shop that accesses directly your account. Lastly, you have the card issuer service providers. They can just check if there's enough balance on your account. Very often, this is combined with the open banking, whereby the banks offer apps to have access to those TPPs. So TPPs, are they competitors? One way yes, one way another not. They have, of course, access to your clients, but very often the banks collaborate also with the TPPs. TPPs can be useful if you want to have new kinds of clients, new niches, so they work very often closely together. So we have now already some important parts of the pieces of a puzzle of this payment traffic. Now some partners, they will use these pieces of the puzzle and put them so, of course, very often with AI, to make it smarter. We think at fraud detection, personalized offers, automated budgeting. Today, for example, already payment transactions are accompanied with a VOP, a verification of payee, where you can see the name of the beneficiary when you make a transfer or request to pay, payment requests. So the payment traffic is not standing still. It is changing really rapidly because of technology, of consumer behavior and new regulation. So there are some important evolutions that we can expect in the next years. First of all, the digitalization. Less of cash and a shift toward real-time operations. The classic transfer will still exist. For the moment, it is neither technology, neither economically possible to transfer bigger files with millions of payments in real time. Take, for example, if you transfer a file with 10,000 transfers and you do it each second, you need more than 2.5 hours. It wouldn't be possible. You can even request, is this überhaupt needed those days? Individual payments, they will go rather quickly transfer to the real-time payments, probably with the help of AI. International payments, they will go faster because of the worldwide standardization. They will become faster, cheaper, and more transparent. There will be also new forms of money. We think at the digital currencies, with first the CBDCs, central bank digital currencies. This is the digital euro by the central bank. A lot of countries around Europe are, for the moment, experimenting with this. We have the stable coins. These are the crypto values coupled at real values. And who knows, perhaps the bitcoins and other cryptos, bit by bit, are a bit accepted, but they're really volatile and very controversial for the moment. Payments will disappear to the background. Systems will automate the transaction so that the client doesn't need to pay himself actively. This is what we call embedded payments. We will have the mobile wallets, mobile channels, and this will do in the background the transfers and mostly activate transfers or card payments, and they will ease the life of clients. In brief, payment traffic is essential. It is changing rapidly, and it requests from banks and fintechs and policymakers continuous adaptations. Thanks for your attention and success with your bank game, and that the best may win.